to the first of Eide Bailly's webinars for 2023. I'm gonna turn off my camera because my bandwidth is jumping around here. So today's session, we are co-hosting with LeaseQuery, and so we'll introduce LeaseQuery in a minute. My name is Eric Berman. I'm a partner. Hang on, come on, there we go. My name is Eric Berman. I'm a partner with Eide Bailly. Today is special again, as joining me today is Wes Williams. He's a technical accounting manager for LeaseQuery. So Wes, why don't you go introduce yourself?
Yeah, I'd love to. Thanks so much, Eric. And thanks so much for everyone over there at Eide Bailly. Really excited to be here today. So my name is Wesley Williams. I am a technical accounting manager here at LeaseQuery. I've been here for about 3 years now. My background does come from external audit. I was with KPMG for a while there as well. So I've worked with all these lease accounting standards. Now we're looking at software and SBITA standards, which we'll talk about today, but work a lot with those. And then I walk a lot of our potential customers through our software. So I'm really excited to be here today again to talk about these fun GASB standards, right, and how we can maybe help you out a little bit here. But yeah, I'll pass it back to you, Eric.
Well, thank you very much, Wes. And, just a little bit about our firm is here. For those of you who are new to Eide Bailly, don't know what we do, we've been around for well over 100 years. We have 40 offices, not only here in the US, but also in India. We're a top 25 firm, and we focus, as you can see in the lower right-hand corner there, we focus on tax, assurance, technology, advisory services, but government is our largest industry by revenue. And so we're pleased to present this today. We have a diverse mix of industries and services ready to serve you. And again, we're focusing, a lot on government these days, of course. Wes, why don't you tell us a little bit about LeaseQuery?
Yeah, I'd love to. So LeaseQuery was founded a little over 11 years ago now, and really coming from this compliance issue for these lease accounting standards. And so we started with ASC 842, right? And then we jumped into the GASB space as well and have implemented well over 1,000 governmental clients now. You'll see here on the graphic, we have grown to over 3,000 customers across the globe. But something that we really love to call out is that average rating on third-party review sites like G2 and Capterra, and our retention rate of 99%. Something that really goes a long way is our customer support. I think that's something that keeps a lot of our customers around and happy, and we are constantly thanking them for all the work that they do. But we do handle all these lease accounting standards and just really make that process really efficient and really easy for you. So hopefully we'll be able to show you a little bit about what LeaseQuery has to offer, in a demo sometime here. But this is a little bit about our company and where we've kind of come from as well.
Over the next approximately 2 hours, we're going to just do a quick review of GASB 87 and introduce you to GASB 96. And we're going to compare and contrast the statements and provide you with some thoughts of, the focus areas of GASB 96. And one of the things you'll realize is that GASB 96 may have some slight twists and turns that you certainly didn't realize in GASB 87. And we should just do a quick overview. And so, Wes, why don't you do a quick review?
Yeah, I'd love to. So GASB 87, what does that exactly pertain to? So we're discussing the new lease accounting standard, but prior to this, was your legacy accounting, right? Where you had leases that were in two classes. So they were considered either operating or capital. Capital leases were being capitalized and operating leases were just expenses incurred. We found a lot of times talking to organizations that majority of organizations had a large portion of those operating leases, and they were just expensing, right? And that's on the lessee side. Now, from a lessor perspective, recognizing the income, you just recognize it as it was received. Again, pretty straightforward. So there's really no balance sheet presentation in terms of recognizing these lease liabilities nor right of use asset, right, for those operating leases under that legacy standard. Well, now GASB A7 came around and really wants to provide more transparency when it comes to your lease obligations. So this impacts both the lessee and the lessor now. Now, hopefully, most of you have seen this impact already and you've made this transition, but you'll now have that single model approach, meaning, all leases will be classified as simply just finance leases. So no longer operating in capital, just finance leases there. So lessees then lease, or for lessee leases, this will result in recognizing the asset and liability for lessors, a receivable, and then subsequently a deferred inflow of resources. So this approach is more so similar to the international accounting standards, which they only have finance leases. So that IFRS 16, if you're familiar, they just have that finance lease classification as well. Again, as opposed to having both operating and finance leases, which you would see in the GAAP in the ASC 842 standard. So not only is there now going from two lease types to one, there's now going from one approach to two transition methods. So there's modified retrospective and the comparative method, if practicable. So the modified retrospective approach means as of transition, you're going to recognize a liability and then that right of use asset going forward for the remaining of the term. For example, so those who have already adopted, with that June 30, 2021 fiscal year end will reflect both a liability and an asset as of July 1st going forward. So you don't worry about that historical information. You take what information you have as of that transition date going forward. However, GASB A7 notes if practicable, and that practicable word is a fun one to dive into because it's a little bit gray there, but if practicable, a comparative period restatement is required. So meaning you adopt GASB A7 during the 2021 fiscal year, you'll need to present the effect of the standard on the prior period with a restatement entry. So you'll restate those financials for that prior year so you can have comparative periods. So as for the effective date, GASB didn't really provide any additional delay. We saw that in the ASC 842 where there was multiple delays for private companies, but the effective date is June 15, 2021. So this past summer here, or 2 summers ago, really now, but applicable to all fiscal periods beginning after that effective date. So that is the GASB statement. Now, what actually meets the definition of GASB 87? And you'll see that laid out here. But under paragraph 4 in the guidance, it states, lessee is defined as a contract that conveys control. And you'll see these highlighted on the screen. But make sure you kind of keep these in the back of your mind as we go through, because these are going to be really critical pieces that we'll dive into a little bit deeper. But it's a contract that conveys control of the right of use of another entity's non-financial asset as specified in the contract for a period of time. A period of time is a really unique one as well, because it's different actually than we see in the other lease accounting standards, where there's a specific set period of time that can't be broken up. GASB is a little unique in that. Again, we'll dive into that a little bit later. But then the last piece is once you identify that period of time, and in exchange or exchange-like transaction. So those exchange-like transactions, we see a lot of times in the governmental space, right? There might be those instances where it's $1, right? $1 lease. So you have a land that they pay $1 a year, and then if in the future at some point, let's say they're trying to grow crop that it's beneficial and they're using that land, then the contract might change there. But that dollar isn't really an exchange-like transaction. So we'll dive deeper into that again, but those are some examples we'll see there. Moving on here. So what defines control? That was the first piece that we saw. Luckily, that's defined right here in this paragraph. So paragraph 5 defines control of the right to obtain the present service capacity from use of the underlying asset as specified in the contract. So this is understanding, whether or not you obtain the economic benefit from using the asset. So something that would not be if you have service concession agreements, excuse me, because you're getting paid to operate the asset. You're not obtaining the actual present service capacity. So that will result in that actual contract being out of scope. Next, we have the right to determine the nature and manner of use of the underlying asset as specified in the contract. So determining the nature and manner of the use. This is whether or not you have the ability to decide how, when, and for what purpose the asset is actually used. So if that is being dictated to the lessee, right, then they don't have that right to determine the nature and manner. So another example that will be out of scope here would be a supply contract, because you're only receiving the output, right, but not having the ability to operate what's producing the output. So keep that in mind here. So both criteria are required for you to convey control. You can't just have one, but I'd like to note that the right to use here is an intangible asset, not the actual asset itself, right? That right to use itself. Now, the recognition of time frame must be indicated in the agreement. So there has to be stated in the agreement a specific time frame. Furthermore, this time frame does not need to be uninterrupted. Again, a unique period or unique to GASB is that you don't have to have an uninterrupted time frame. So GASB implementation guides provide an example in which an entity uses an asset for 3 days in a week, right, to actually obtain substantially all of the economic benefit or obtain sole control is not required to meet the definition of a lease. So if the lessee's time period is specified in the contract, they meet the definition of control, just as it is, right? As long as there is a specified period, again, does not have to be uninterrupted. You will also consider if the agreement is 12 months or less, or classified as short term. So these two examples here, they have some exceptions. So we'll look at these exceptions here in the next 2 slides. Now, you have an exchange or exchange-like transaction. Now, I've spoken to clients who say that they, as the lessor, for instance, a governmental entity like a municipality, leases out a building to another third party. When leasing it out, the exchange is for $1 for the year, like I mentioned earlier, right? This is not an exchange-like transaction. So that will fall out of scope of GASB 87. And again, you will not account for that as a lease. Other examples will include donations and grants. Those are non-exchange-like transactions. Ultimately, it has to be an exchange or exchange-like transaction when it comes to consideration that is received or given for a specified asset from a leasing standpoint. That is also important to consider, right, around that specific asset, right? Now, you're probably wondering if there is a specific threshold. There is no threshold actually stated in the standard itself. However, most entities adopt a threshold similar to their capitalization thresholds, right? So that's a really common place to start, is that capitalization threshold. But Eric, you care to comment on that from your perspective and what you've kind of seen there?
Yeah, sure. Thank you, Wesley. One thing we've been noticing as governments have implemented GASB 87 and have started to implement GASB 96 is, there's a tendency to jump, automatically to the materiality box. And every GASB standard has the same box, discussing that the standard does not apply to immaterial items. Unfortunately, folks, materiality really is an audit construct, not a preparer construct. And a focus of the audit of leases thus far, and it will be under GASB 96 as well, the focus has been on recognition, meaning, did you recognize the contracts that are in scope for GASB 87 and will soon to be in scope for GASB 96? And so one thing we've been doing with clients in implementing GASB 96 is saying we need to see all the contracts, not just the ones you think are material, and because for the auditors of that particular entity, they want to see completeness. And the goal is to recognize what you need to recognize in terms of a liability and an asset. And once the inventory is known and the value of the leases in this case can be measured, then we can all have a judgment on materiality. But until your government has a reasonable contract inventory, it's really next to impossible to judge what is material and what is not with any form of reasonableness. And certainly, coming around the second year for some clients in implementing GASB 87, there's always one or two already that have said, yeah, that wasn't recorded, so far. We really need to go implement that one. And depending on the level of a liability or asset, that could be a beginning balance adjustment. So Wesley, what are some of the contracts that may be out of scope?
Yeah, definitely. We've talked about a lot of in scope. So looking at what's actually explicitly excluded. So a few things you'll see, right? Intangible assets. So the right to explore for natural resources or licensing licensing contracts for films, right? You'll have biological assets, so timber or living plan. Service concession agreements is a really common one, but like the parking garage where there's fees collected from a third party for its usage. Until you get to GASB 94, right, for the service concession agreements, that's where you'll see that accounted for. But then you also have supply contracts. So an example may be power purchase agreements, and then title transfers and short-term leases. We'll talk a little bit more in detail about that coming up, but we'll move on here. So the title transfer to lessee. So first, let's start with that, right? So as entities are no longer required to walk through the 4-part test, right, to establish those lease classifications. If you remember, again, we're under that one lease type now. So if title or ownership will transfer at the end of the lease, then it will be seen as a finance purchase or even a sale, even if it's stated within the agreement. So if again, we're so used to that test where we go through and say, hey, is this an operating or is this a capital? A lot of people tinkering to identify and make sure that that lease maybe will fall under operating. That's out the window, right? So we don't have to worry about that. But if you do see that title transfer, the standards actually can consider that as not a lease, and again, as a finance purchase or as a sale. However, if the lease contains a purchase option, including a bargain purchase option, it should not be deemed a finance purchase until that actual option is actually exercised. So the board concluded that some governments don't exercise bargain purchase options, even if it appears to be economically advantageous, right? So they've gone through and done that analysis. And again, they didn't see that always being taken. So again, until you actually exercise that is when you'll then identify it as a finance purchase. So lastly, though, short-term leases. It's important to evaluate, whether a lease is scoped out due to it being a short-term lease. Entities they have to consider, right, whether the lease is 12 months or less. But here's the kicker, here's the caveat, right? Including all options. So any purchase options, any renewals. So if you have, a renewal option, you might have heard in the public and private space, the reasonably certain to take a renewal option is a consideration. But when we're thinking about scoping, that's out the window, right? If you have a renewal option, you're essentially looking at the maximum possible lease term that is available to you. So if you have a 5-year lease with a 5-year option, even if let's say a 6-month, 7-month lease with a 7-month option, even if you're not reasonably certain to take that, you identify that max possible lease term, again, regardless of the reasonably certain, and to determine whether that is longer than 12 months or not. So if it is in fact a short-term lease, you're going to account for it in the same manner as you did historically, right? You're accounting for it today and treat it as just the outflow. So you just track that cash and expense from the lessee side, not have to create an asset and a liability there.
What are we talking about with GASB 96? This is really the third of the three standards using the same framework. So all of the angst and wow and hard, but we got through it. Not too bad, but not too fun. We got through it. Just keep that in the back of your mind when we get to GASB 96. The framework includes not only GASB 87, but also GASB 94, which is public-private and public-public partnerships and availability payment arrangements. Now, try to say that after the Super Bowl party or after Mardi Gras. And now we have GASB 96, subscription-based information technology arrangements. And by the way, all were slightly amended by GASB Statement Number 99, which is Omnibus 2022. But really, GASB statements 94 and 99, here at Eide Bailly, we're going to save that for another webinar probably later on this spring. So now GASB 96 establishes accounting guidance for your subscription-based information technology arrangements, also known as SBITAs. And again, try to say that after Mardi Gras. Some examples of SBITAs are your ERP system, online conferencing, such as what we're using now, such as GoToWebinar or Zoom, Microsoft Teams, cloud-based storages such as Dropbox, and even LeaseQuery. LeaseQuery software will be considered one of your SBITAs, at least to inventory it. Now, as you're going to hear through this section, the key is what is in the contract. And some of these contracts are pretty in-depth. And some of the software packages may or may not be in scope. It really depends on the language that is in those contracts. Now, there's no prior guidance in for SBITAs in GAAP, but it is effective for fiscal years beginning after June 15 of last year. Now, I'm glad to have all of you here today, and we have a lot of folks on the line. So yeah, we can now get the ball rolling and have each of you implemented as soon as possible. Now, again, whatever you learned is similar to GASB 87. A lot of the language is copied word for word within GASB 96, and they just made it applicable to IT applications in certain combinations of hardware and software. Now, again, GASB 96 largely uses that same framework from the GAAP standard on leases, but solely for the end users of SBITAs, because there's no such thing as a lessor, that is a government that would have to implement effectively the 87 standards as a SBITA vendor. Now, yes, the GASB knows there is a pass-through entity, at least one that I know of, where a state government effectively operates and passes through software, but that is not really in scope. Differentiating the types of software as a service or other types of contracts as a service is a little bit tricky. But simply put, software as a service, or SaaS, is probably the most common, and that's software that's available via a third party over the internet. And PaaS, that is hardware and software tools available over the internet. And then we have a third flavor, which is IaaS, which are cloud-based services such as pay-as-you-go things for storage, networking, and virtualization. And you can look at your phone, of which I know some of you may be doing as I'm speaking, and your phone may be an Android phone or an Apple phone, and that is an IaaS type of service or infrastructure as a service. Another thing that could be is, again, Cisco, Citrix, and so on. And then we have a big one that's out there, data warehouse as a service, and that provides those massive data storage facilities and data warehouse management services without investing in a proprietary data warehouse solution. Now, these are all colloquially known as cloud computing, but some of these contracts may be in scope and some may not be. And it's because of the definition. So what's a SBITA? Under paragraph 6, a SBITA is defined as Pretty much what you just heard for leases, a contract that conveys control of the right to use another party's IT software. And that's a big change here. Now, that includes IT products such as SaaS, IaaS, and platform as a service. Now, this can be alone or in combination with tangible capital assets as specified in the contract for a period of time in an exchange or an exchange-like transaction. And again, you're probably saying, oh, this is deja vu all over again. And it's because it does. As you can see, this definition mirrors the exact definition of a lease under GASB 87, with obviously some exceptions that we have to do because we're focusing on IT software alone or in combination with tangible capital assets. Now, the IT software, that's an intangible, but you can use it alone or in a combination. And if you think about it again, look at your phone. You got a boatload of apps that are on there. And sure enough, you don't need to buy those apps or license those apps. Now, there are some exceptions I'm going to get to over the next few moments. Now, the first exception, and this is the most common, it has to do with time. And some of the contracts we already have reviewed either have no period that is mentioned, or they pretty much are month to month or year to year, and they may include cancellation clauses after a month or two, or a month or two in advance of the end of the subscription. Now, there are a handful of contracts out there that are perpetual. And if they are perpetual, they transfer the software's ownership to the user. Now, again, these contracts are rare. And if you are sure you have that contract, you may need to capitalize the SBITA as you end up having ultimate ownership of that piece of software. And it becomes a capital asset that's not returned. And if you have one of those, I want you to pick up the phone and call Wes or myself because I really want to see it. These are real rare,
Yeah.
Many contracts, though, are annual renewals or monthly renewals, and many, again, have cancellation periods. If the contract has a cancellation provision, do not set it aside. No, you still have to inventory it for completeness purposes and potentially compliance with laws and regulations. Now, wait a second. I just said compliance with laws and regulations. Now, why? It's because of those pesky anti-piracy laws. Now, any of you getting an email saying you're losing access to Netflix or video games, yeah, you know what I'm talking about. You used to share all that stuff among your family, and guess what? That's anti-piracy laws. Now, a subscription to Netflix, now that's a small monthly fee and you can cancel at any time. Is it in scope? It's probably a short-term contract that you probably need to inventory, for completeness, but your family doesn't have to implement GASB 96. And so that's why that anti-piracy is so important. So speaking of 96, let's get a little bit deeper into some of the scope exceptions. And this one is an emerging issue now. Some breaking news: the GASB just released a proposed implementation guide question on this issue. This is the first time, it's certainly in my working with the GASB since, gosh, I'm now going on 30 years, that they have amended a previously released exposure draft of an implementation guide. And that what they did was they proposed a simple question. Does a cloud computing arrangement meet the definition of a subscription-based information technology arrangement, or a SBITA? But their proposed answer may upset you. They propose that a cloud computing arrangement may or may not meet the definition of a SBITA. Cloud computing arrangements have three common deployment models, and we went through those a couple of minutes ago: software as a service, platform as a service, and infrastructure as a service. And the three deployment models provide you with the right to use a combination of another party's software, intangible capital assets. But the definition of a SBITA requires that the contract conveys control of the right to use, the other party's IT software and so on. Now, As part of the determination of whether a cloud computing arrangement meets the definition, your government's going to have to evaluate whether or not you have control. Now, again, this is proposed, but the implementation guide questions are rarely controversial. My personal opinion, not my company's or LeaseQuery's opinion, is if your data can be accessed from the cloud and the data is secure, chances are it's an asset. Your government can use that data, exchange it to other parties as needed, and employ it in your operations. And therefore, in my mind, it needs to be considered an asset. But the problem then lies, how do you measure and value that storage space? And that falls under GASB 96. And because you got to measure and value it, it becomes part of GASB 96's implementation. Now, this may not apply to all contracts, but the ones I've seen, it does apply. And therefore, I think it might be a SBITA. But again, that's just my opinion. So, Wes, why don't you talk us through some of the key differences between 96 and 87?
Yeah, love to. I'd love to. And like you mentioned, they are very similar, and a lot of that is even the exact same language, but there definitely are a few differences. So the first one is that GASB 96 solely provides guidance for users of the IT software. So we're not referring to the owners or those providing us access to it, right? In the context of GASB 87, where again you had a lessee and a lessor. For GASB 96, the guidance only provides information regarding the end user, which is us in this case, right? So, in that LeaseQuery instance, right, GASB 96 would apply to the users of LeaseQuery, but not LeaseQuery itself actually, offering that software as a subscription. So that's the first key difference. Secondly, GASB 96 does not apply when the IT software component is insignificant compared to the cost of the tangible capital asset. And this is, very similar to what Eric was just talking about here, is that, you may come across contracts that have both IT software and hardware components, right, in the same exact contract. And so in this instance, you're going to have to decide which standard this falls under, because you'll evaluate the significance of the actual IT software compared to that actual capital asset. So whichever is more significant will take precedence in terms of which guidance actually applies to that overall contract as a whole. So you don't split that contract up and take the software component under 96 and the asset under 87. You identify which one is more significant in that contract, and then that's the standard that contract and that lease, or I guess that contract as a whole, would apply to. So now most governmental entities have at least 20 SBITAs is what we've seen. And we offer free tools via our site to assist with tracking SBITAs and transition guide to actually get a head start in identifying those. So if you're ever interested in that we definitely have a lot of resources there. Now, there are some important scoping considerations as well. So SBITAs effectively meet the definition of a lease per GASB 87, right? There's the control, the timeline, those things, those key highlighted pieces that we talked about earlier. But when you're looking for SBITAs, they're similar to identifying your leases under 87. So very similar process exists. Instead, we're identifying the IT software versus that actual tangible asset, right? That includes hardware or fixed asset. But that leads to possibly evaluating contracts that may have the combination of the two, right? Again, like we talked about, both IT software and a tangible IT asset, such as a laptop, or even a modem. So whether a SBITA is in scope for GASB 96 really depends on the underlying assets involved. This is where we're really evaluating and seeing what assets are in scope under GASB 96, and then subsequently, right, how to appropriately account for those assets involved in the contract. So, Eric, we've talked a lot about these SBITAs, but would you mind, kind of walking us through an actual example of one?
Yeah, sure. And this one is pretty straightforward, Wesley. What we want to do is, once we assume that we have a contract that is in scope, we're going to compute the SBITA liability and the SBITA asset. Now, by the way, there are many, many contracts where your asset is going to be very different from the liability. And we'll explain how, coming up over the next few minutes. And those of you who have previously attended some of our GASB 87 webinars, this is going to be similar in how we calculated the SBITA liability and the SBITA asset. And there's not that much of a difference. And there's a typo here. We say the word lease. Well, okay, X out the word lease and put in the word SBITA. So here we have a 3-year SBITA that is marked as a lease, which could be common. In fact, I've seen plenty of contracts that are SBITAs that are marked as a lease because that's the format that they use. Now, we're going to start on July 1st, and these are annual payments of $5,000. And annual payments are also pretty common. At least 90% of the ones that I've looked at so far have been either an annual payment or in some cases, one time, where the government just decided, something, I'm going to pay for my entire 5-year subscription up front. And that's okay, but it takes special accounting to do that. And that one-time payment does occur. Now, in this SBITA, the government used a discount rate of 2% and incurred implementation costs of $2,000. So this is a pretty small piece of software that is, again, marked as a lease. But don't get confused by the text in the contract. If it is in scope for GASB 96, you got to use GASB 96. Now, our first step is going to calculate our subscription liability, and that's essential. And then calculating the present value of the remaining payments on this subscription contract. And you can use your trusty HP 12C with dust on it to generate the numbers, or use software like LeaseQuery. And again, LeaseQuery has a free present value calculator on their website, but many of these contracts have a lot of twists and turns in them. So you might need something more than the free PV calculator. You simply plug in the terms, and we're going to calculate what the liability is going to be. Now, based on our terms, 3 years, $5,000 in annual subscription payments with a 2% discount rate. Now, our subscription liability is going to result in $14,708 as a liability. Now, that's going to be the initial liability we recognize as of day one of the contract. Now, again, many of these contracts have payments up front, so we're trying to keep it simple. Now, as you noticed, we're not going to implement the implementation costs, as this will be a factor in the subscribed asset. But we start off with the present value of $14,708. Now, again, that's a very common issue, that the asset is going to be different than the liability. And why is that? Well, the liability has some of the same provisions as leases. The payments may be fixed, which is most common, or variable based on an index or rate. And there may be minimums or maximums based on, usually the ones I've seen are throughput or storage, meaning how much space did you take up on the server, or how many bytes went through the pipelines to get to the server. Now, there may be termination or cancellation penalties. There may be incentives from the vendor, but watch for those. You may not be allowed to accept those incentives under your own jurisdiction's laws and regulations. Now, there have been cases of incentives from vendors or consultants that really were judged to be bribes. In the case of a software vendor, I know pretty well up here in New England. So consult your legal team prior to receiving an incentive related to a SBITA. SBITA payment holidays are usually fine, but other incentives may not be. And finally, any other payments that are reasonably certain would be there to potentially adjust the liability side. On the asset side, we're going to make that adjustment for the incurred implementation costs. And we're going to take the $2,000 and add it to the initial subscription liability of $14,708. And that'll get us to, if in the case you're falling asleep, that's going to get us to the asset value of $16,708. Now, the process is comparable to what occurs when calculating the initial lease asset under GASB 87. And, and we may have items such as prepaid rent or deferred rent outstanding as of adoption. And we'll have to make an adjustment to our right of use asset and then write them off and de-recognize those amounts. Well, the same thing occurs, to a SBITA. And again, we're going to have an intangible, and that's going to be our right to use asset. So let's look at the end result of all of this. And this is a, real screenshot of an output from LeaseQuery. You're ultimately going to have an amortization schedule in place to track the movement of liability and an asset over the subscription term until the agreement ends. And as the end user, just a reminder that that GASB 96 is only applicable to you governments out there, and it's not applicable to the vendor. Now, in July 22, we're going to pay our $5,000 annual payment. And you can see that in the upper left-hand corner there. So that's our total cash outflow. And we have the interest expense, and that's treated much like a note payable or like a lease. And if you're familiar with the amortization schedules under a lease, this is pretty much the same. And the only difference really is the header terminology. The difference there are the accounts that we're going to be hitting. We're going to be hitting a subscription liability and a subscription right to use asset versus a lease liability and a right to use lease asset. Now, the liability reduction is the principal payment, and that's going towards the down payment and payment of our liability. And if we're accruing any interest in periods we aren't making any payments, we have the accrued interest liability and the cumulative accrued interest liability. Now, that's an interesting point out there. There is a draft implementation guide question pertaining to leases where the government essentially paid for the lease 3 years in advance and then did not pay any more in a 10-year lease. Should the interest be accrued? And the answer is absolutely yes. You do have an interest expense, even though you don't have any interest, you don't have any principal payments going on for the first 3 years. And the same thing can be true for a SBITA, and I've actually seen 2 of them just like that, where you pay in advance and even before your SBITA term, which we'll talk about in a minute. And again, your interest liability and interest expense is going to be an interesting calculation. What the cumulative balance is at a point in time, and here we have a subscription liability, and that's based on the present value calculation. And then we got our remaining payments over the term. And we've got our net subscription asset balance, and that's our liability adjusted for the implementation costs. And then we amortize that over a straight line basis. Again, exactly what we're doing over in lease land. And some of you may refer to that as depreciation expense, but in reality, it should be amortization. Now, lastly, we have our accumulated amortization. And I did want to take a step back and point out that you'll usually pay annually for your subscription-based information technology arrangements, and even LeaseQuery has that option. And now leases, usually they're monthly payments. The main takeaway here is that a SBITA liability and assets are recognized on the statement of net position at the commencement of the SBITA's subscription term. But that's not all. Again, the asset side, as you saw there with that $2,000, may be far different from the liability side, especially in big systems, typically ERP systems. And that's because there may be payments to the vendor to get the ERP system to a point defined in the contract as what they call go live. And that's a very important distinction. In some of these systems, there may be millions or tens of millions of dollars put into the asset side before you have an amortization of the SBITA liability. And that's because you don't have full control of that asset until you have go live. Those payments may be ongoing for years. And since they've been made prior to the system being functional, they're added to the cost of the asset. similarly to construction and process, by the way. And, it switches over just like CIP once the system becomes functional. And there are other capitalizable implementation costs we're going to talk about in a few minutes. Now, just how do the payments before the term work? Well, the asset, you may remember, is the initial liability. But since we are before the SBITA term, the payments are then debited to a prepaid asset account. It's not SIP, as we're not constructing anything. We're just enabling a right to use asset. So some form of prepaid asset, that's probably going to work. Now, nobody's really implemented this as of yet, but there have been plenty of contracts I've looked at where there are prepayment streams. Now, once we go live with our system, then we credit our prepaid asset and debit our right to use asset with our capitalizable costs. Now, what about incentives received before the term? Well, those incentives would reduce that prepaid asset. And if the prepaid asset goes below zero, I mean, let's say LeaseQuery really gives you a lot of incentives to join their system. Well, if it goes below zero, then you really have a liability or an advance. And once the system goes live, then the liability gets debited and reduces the asset. It's not the world's greatest accounting, but that's what's in GASB 96. But let's go a little further in these bigger systems. Now, per paragraph 29, activities associated with a SBITA, other than a government making a subscription payment to the SBITA vendor, now there's three stages, sort of like the three stages of grief out here. The preliminary project stage, it includes activities associated with the decision to procure the technology provided by the SBITA. Now, what am I talking about? Many of you hire consultants to evaluate vendors such as, okay, what's the best lease accounting software, or what's the best SBITA software? And maybe you'll choose LeaseQuery after today. Now, those costs of evaluation before you actually sign a contract, those are expensed as incurred because you don't have a contract yet. They're not going to be capitalized. And they could be substantial, especially if you're using a project management office, or you're doing a request for information and you have multiple rounds of RFPs and so on. Now, during the initial implementation stage, you all may spend money and resources implementing the software. So when implementing a package such as LeaseQuery, that'll include getting the software up and running, migrating the lease data or SBITA data into the software so that the system functions, but not training. Those costs are capitalized and are factored into your SBITA liability and asset, and that's the same thing as that $2,000 implementation cost. Operational and additional implementation stage, well, you can imagine this being all the additional costs pertaining to technical support and maintenance, which is really common in these contracts. And that's during the SBITA term. That's all those costs are generally expensed as incurred. Now, those are the three types or phases your IT costs will fall into, but it's important to note we're only capitalizing costs that are applicable during the implementation stage, and everything else is expensed as incurred. So for those of you who have a right on screen, just circle that at that middle bullet there, or underline the word capitalized, because that's the biggest deal that's out there. So let's look at this sort of geographically. And again, you may want to keep this handy if your government's implementing one of those multi-year big systems. And having been through many of them as a preparer and with my clients, these are not fun and they are costly, but they're all multiple phases. Before you get funding and before you decide on a system, again, those costs are expensed. And beyond that, except for training, you got to capitalize. And after a point in the contract where you have control over that SBITA, after that point, which is called go live, you expense again. And finally, all training is expensed as, again, the GASB realized that these costs are period costs. In other words, training goes in one ear and it goes out the other, as I'm sure you're doing right now. So let's get a little bit deeper in this one. Again, keep this one handy because, as I like to say, 10 times for the normal mind, 100 times under stress, and you're all under stress. Look at the orange sections and see the difference between those and the blue section. Now, it's common again to have significant RFP costs for like large state RFP systems. The cost of an RFP may exceed $1 million with a PMO cost and legal costs and so on. That could exceed $1 million pretty easily. So you can see that there's RFP costs, demo costs, payroll and benefits for contractors, legal teams, legacy shutdown costs. Those are all expensed. Now, the implementation is also, that's pretty intense, and that's where you get your hands dirty, just like a construction project. We're talking about design, code, test, parallel process, conversion, testing again, and then you get to the day you go live, you move in the cots, as I did. Oh gosh, over Y2K, we moved in cots into my office, and we slept while we were watching the system. And you wait until the system stabilizes. And then after that day, everything is expensed if the activity does not increase your system's functionality or system efficiency, even though you may be adding new modules. But some new modules may add functionality or efficiency, and we'll talk about that in a bit. This in the next slide are two tiny pieces of a 238-page contract that is a real SBITA. And this is for a voice over internet protocol system, network security, disaster recovery, software, hardware, consulting, and many other activities actually for a LeaseQuery client, as well as an Eide Bailly client. And so yeah, this is a very, very complex system. Now, this particular contract has payments in advance. In this case, 60% was upfront at a particular milestone. And this is way before go live. 60% of the entire contract was paid upfront. And so that's why the asset side may be very different from the liability in a SBITA, and this is very common. So overall, the project had a 7-year term. It's a big system, and 1 full year to build, which far exceeded $1 million. So at least if you go here, I'm going to go back one more slide. At least 60% of at least $1 million, we're talking serious money here. There were so many elements in the contract, it would be hard to present here, but the activities generally fell into the 8 categories on this particular screen. But since payments for the SBITA were upfront, what do? Now, for this SBITA, you have a right to use asset at the point of go live, but no liability as it's been paid. Now, there may be some ongoing maintenance of the software costs, but if the maintenance is aligned to the SBITA period, it could be a component. If it's less than the period, it may still be a component, but remember the discount rate may change just like a lease. And this could also be a combination SBITA because this particular government and client of LeaseQuery, they have multiple locations. So this could be a combination. So it hits a lot of buckets within GASB 96. All right. So Wes, how about comparing GASB 87 and 96 a little bit further? And let me, come on, there we go.
Yeah.
All right, Wes.
Yeah, happy to, and thanks, Eric. So we covered GASB 87, giving you that refresher, and then Eric, took you through it and really dove into GASB 96. And so, he said it at the beginning, but there's almost a little plagiarism, right? Copy and paste. And so, I'm pretty positive after you saw that what Eric went through, that you'll see that at least for some of those aspects, it really is just a copy and paste, from 87 to 96 with minimal differences, right, pertaining to subscription IT software. But in this section, we're going to focus on those similarities and differences. But for those big ERP systems, there are differences. So GASB 87 and 96 have some differences. The low-hanging fruit is obviously 96 is to be implemented this year and 87 was last year. So you get that year buffer between the two. GASB 7 involves leases of tangible capital assets, and your government may be the lessor. GASB 96 involves a subscription to a vendor's IT technology or perhaps software. However, right, if the software is insignificant, we're back in GASB 87 land. So I know that I saw a question there was, do we split it out? No, you have to identify which is the more significant in that contract, and then that will determine the standard. So further, GASB 96 has no provisions for the vendor side of the transaction. So it's only on the users, the end users, the lessees, as you were thinking about GASB 87. Now, of course, GASB 87 has guidance for lessors, which is analogous to a vendor, but both of those use the same framework as you have heard right during this webinar. Now, there are differences between the standards, as you've heard so far too, right? There are specific terms and elements regarding leases that are not present in SBITA contracts. So, however, SBITA contracts may be mislabeled as leases, actually, right? You might see, hey, this is a lease, but the name on the contract doesn't determine what type of contract we have here. So make sure you're really careful and when you're reading through those, and don't get tripped up in legal language and think that that's the same as accounting language, right? SBITAs that are complex, when you think about these complex SBITAs, may have capitalizable implementation costs. So the example that Eric walked through earlier, there was those $2,000 of implementation costs, and there are situations where that's definitely capitalizable. But in those situations where leases only really have potential cost of placing a leased asset into the control of the lessee, that's where you'll see those situations there of when you'll actually capitalize those implementation costs. But most initial direct costs are expensed. We saw in the example where we paid $2 million on the polling question, prior to that contract. Those are some of those initial direct costs that you would think of in going through the identifying your team who's going to identify lease, or the software, the actual and I'm totally blanking on this word here. The consultants, oh my goodness, that's a tough word, but the consultants, right? Those fees, those are those costs that are just going to be expensed. Finally, the note disclosures is similar. So you have those disclosures that you're going to put into your financials, but remember, there are no vendor disclosures for SBITAs. So you don't have those lessor disclosures, but the lessee side or the user side, there are those similarities in those disclosures. Now, for SBITA contracts, the liabilities may be amortized over a much shorter period than a lease of the same magnitude, right? So some contracts are paid well in advance of a term, and other contracts must be amortized over the shorter of the useful life of the underlying asset versus the actual contract itself. In leases, most tangible capital assets useful lives are stable, right? Your buildings are 40 years and your vehicles are 10 or whatever it may be, right? But as we know, technology moves just at a rapid pace. So, the amortization of the right to use those assets and liabilities in a SBITA may be very different than what you've been used to under GASB 7 with your leases. In terms of the SBITA asset, some ERP systems are implemented over a long period of time, right? These are known as waves. So if the functionality and the efficiency of the SBITA asset increases with that new wave or that next wave, that is capitalized and is a new right to use asset. So if you do have that increased functionality and efficiency, let's say wave 2, wave 3, that is actually going to be a separate and a new right to use asset. Otherwise, it's just expense like training and certain other conversion costs that are not necessary to make the asset actually functional. So keep that in the back of your mind here. And, again, focusing on if there is that jump up in actual functionality and efficiency from wave to wave, that's where you need to consider capitalizing that, and again, potentially as a new asset. Now that we've been through the basics of GASB 96, what can you do to put your best foot forward? So, how can you actually prepare for GASB 96? It is coming ever so quickly here. So let's discuss what you can do today, right, to ensure that compliance, and again, just put your best foot forward and not be stressing, when we get time to this summer. So for those of you who are already up to speed with 87, implementing 96, it'll be a similar process, right, with accounting, classification, and documentation. If you have yet to comply with either guidance, you can plan to implement both concurrently, and we'll be able to make that an easy process for you for sure. Again, because of those similarities, if you haven't adopted both, best practice is definitely to implement both concurrently. But when we want to take our best foot forward, right, the first thing to do is evaluate your current subscription-based IT arrangements, accounting, and management processes. So the first thing we want to do, centralize those records. Now, put a little caveat before we dive into this. Again, Eric mentioned, don't go through with the mindset when you're centralizing all these records that we're only going to centralize in scope SBITA records, right? We want to centralize every single SBITA record so that we can have that completeness, right? That's what your auditors are going to want to see. And then you can start sectioning that complete population into what is in scope and out of scope. But the centralizing of those SBITA records is important. You want to understand what you're doing with your SBITAs, right? Who is booking them? Excuse me, are they centralized? Is it only going through, is it multiple departments? You essentially want to start pulling those together. And then again, once you do have those centralized, you'll start to evaluate scoping. So once we have that complete portfolio, this then will go back to scoping of your subscription agreements, right? Evaluating how you'll account for those. Do the contracts consist of only IT software, or do they have both software and hardware? And then again, which guidance do they apply to? Which one is more significant in that contract? So once you have that complete population, then you can start to make those evaluations and determine, which bucket you're going to put them into. And then thirdly, here you'll see understanding the process for new SBITAs, right? So how do you get into a new SBITA? Now that you're aware, you'll have to account for them. It's going to be best to create or make a process for new SBITAs, so that going forward, your accounting department is notified, in the appropriate time and manner, so that you can evaluate those going forward. So essentially understanding your current processes and having that solidified moving forward. I would say, as a former auditor, document, and a little bit more document, right? Document as much of that as you can, so you can fully understand what those processes are and you have them clearly identified. So once you've taken those steps, then we're going to identify, what internal resources to allocate to managing this actual portfolio. So first step is determine involvement, right, among departments and establish interdepartmental communication. By far, right, the most common word I have heard in talking to governments is decentralization, right? We are decentralized, we're everywhere, right? This is an area where we're going to want to fight that as much as we can, and really get that interdepartmental communication going, because if not, you're going to have some serious risk of missing these, right? Of not having that complete portfolio. So, if you've already implemented 87, that multiple departments are involved, right? Whether it's procurement, real estate, whoever it may be, right? There are multiple departments involved, including legal, on top of the accounting, who is really critical here for the financial reporting aspect too. So getting all those departments up to speed and aware, educating those departments that are involved is just incredibly critical. So make sure you have them together, and then also again educated too. Then be aware of any internal control limitations. So hopefully, again, you've documented those internal controls, identify those, see if there's any limitations that you're going to have to be concerned around with these managing of SBITAs. And then whatever you've done for GASB 7, you'll do for GASB 96 today to implement. We can have you in compliance with both, within a software. We're happy to walk you through that hopefully soon, and just show you how, again, 87 and 96 can both be implemented, and really stored and handled in an efficient process, again, inside of that software. But one problem we are already seeing, again, in decentralized governments is multiple departments are able to sign license contracts. So again, like Eric was mentioning earlier, beware of those anti-piracy laws in your state and of signing contracts for the same software in multiple locations. So they're inefficient and could cost really precious funds there, because most SBITA vendors offer quantity license discounts, and by attaining multiple license discounts, there's a way to control those logins and avoid those anti-piracy laws here. So next, we'll look at some of those qualitative considerations, right? So what have you done in GASB 87 that you can apply to GASB 96, right? Consider those historical resources. We did the poll earlier that walked through how you felt about that implementation, and most of it was not fun, hard, right? Wow, that was difficult. Use those historical lessons, right, that you learned in GASB 87 and apply those to GASB 96, right? Where can you find those efficiencies? How can we mitigate some of those headaches? Hopefully taking those steps that we walked through in these previous slides will really help mitigate those same problems when you're implementing GASB 96. Second, understand the nature and complexity of your SBITA portfolio. Just incredibly important, right? Though, as we've seen, the example that Eric walked through of the SBITA, they can be incredibly complex and lots of nuances. So understand those natures and those complexities and identify those to ensure that you're accounting for them appropriately. And then allow enough time, right? Time is our biggest advocate, also our biggest enemy, right? So allow time to deal with the complexities and potential nuances, right, when you're implementing that standard. And then really too, if you're looking at software, when you're implementing software, allow enough time, right? I know I noticed multiple times, a lot of times entities just do not give enough time to these projects, whether it's the collection, right, implementation, potentially implementing software, hopefully all of that is a very time consuming effort. And so, please, I'm just begging you, please don't kick the can, right? Hopefully, again, you've learned that lesson from 87. Do not wait. Get your SBITAs together, right? That's the first step. Get all of them together, and then allow enough time for you to properly implement that, potentially, again, evaluating that software as well. So, Eric, these are a lot of considerations that I've thought through here, but what are some potential other considerations, when users are going through and implementing 96 that you can help us out with?
Yeah, and Wes, and I agree on time. This is one of those standards you don't wait and look at your calendar and then say, oh, gee, Eide Bailly's showing up. I got to get going. No, you gotta get going as soon as you can on this one. This again, the same implementation team used for 87 can be used for 96, and we know that you may be a team of one, and that's fine. But if you have a team around you, keep that team together. And you may also need your chief technology officer or CIO involved. And, one of the things that we've said to clients is, why don't you ask your CTO or CIO what is in that contract? Because I'm not going to read a 450-page contract. They should know what's in that contract. And if they don't know, then why the heck did they sign that? These contracts are not fun to read. And how many of us swear we read that tiny print when we upgrade our operating systems or our technology? And my watch upgraded overnight to a further update. And sure, I read that tiny print on my watch at 5:30 this morning. Nah, I didn't. Now, if you print those pages out of tiny print, those pages can be many pages long. Now, again, involve your CTO or CIO just to get through that fine print because they know what it's all about. What is in that fine print is understanding is vital to that understanding of 96. Finally, inventory is not only important from an accounting and reporting aspect. Again, think of those laws and regulations, as I've said over and over again. If you do not have a concise, updated inventory with licenses, you not only have a recognition and completeness problem for accounting purposes, but you have a compliance problem. If you're going to go down the all the above route, let's think about who do you involve with the team, and they're on the screen here. And again, I mentioned legal and contracting, that goes for anti-piracy, treasury and finance about discount rates, internal audit if you have one, to do a regular search for contracts. And you'd be really, really surprised, again, especially in decentralized organizations, how many people can sign a contract. And some of those folks may not have signatory authority. So just beware. And then, of course, governance, because they're going to have to sign off on the policies and procedures and discount rates and so on, because they're the ones who are signing representation letters in front of your auditor. So involving all of them on a team would be really, really a good idea. We know the focus area of the audit of SBITAs, and they're probably going to be mostly like leases with that important exception, compliance with laws and regulations. Again, for example, many governments are following suit of some areas of the federal government and restricting access to a popular software program that is designed in China or owned by China. Now, that particular app may not be in scope, but it's indicative of the importance of compliance. And again, I'm not either for that or against that. It's just something that a lot of federal agencies are kind of thinking about. Now, the language in SBITA is pretty tricky. Again, some contracts use that word lease. Don't be fooled. The contract may have both hardware and software. I mean, think about your smart copiers. Your copier is definitely okay. That's usually a lease, but it has a piece of software that's attached to it. Now, is that software significant? That's debatable. But if it was significant, then that would be under 96. If it's not significant, well, then it's under 87. Another place where you may have to decide is many new vehicles have subscriptions to technology that you can license. In other words, the nav system in the new car is by subscription. And if you lease the car, then the license payment for the nav system may be insignificant in comparison to the payment you're making on the car. Now, that evaluation needs to be made. If the nav system is insignificant, then we're back at 87. Now, we need to have a goal of evaluating all the contracts for whether the contract is in scope or not. Don't just, again, do this 2 weeks before the auditors show up. This really needs to be done throughout the year because guess what, folks? Your managers are downloading those apps every day. And so just make sure this is done through the year. The team should meet regularly, perhaps even every few weeks to evaluate the contracts. Both of our firms can help you implement, and the service levels really are up to you. We can provide consulting, effectively being a help desk, and provide guidance on policies, procedures, internal controls, and reporting. And we can help you convert through surveys, contract review, and searches for unrecorded contracts. We can help you implement through data conversion, machine learning, and again, refinement of policies and procedures. Or you can just throw your hands up and say, Eide Bailly and LeaseQuery. Here you go. Take this entire shoebox. And by the way, if your government's implementing an ERP system, we can probably be your PMO, provide resources, tools, and many other aspects to make your system a success. So it really runs the entire gamut as to what you want to do on this particular system. But as the clock ticks more and more towards your fiscal year end, gee, that those arrows get tougher and tougher to do. So start thinking about this, as soon as you can. We also can be with you throughout the year. Again, here are some common aspects of our engagements that both of our firms do. Please feel free to dog ear this page and keep it in mind. And again, for you June 30 governments out there, the time to get moving, well, that's pretty much now. Some of the key policies and procedures are the same as leases. And those policies and procedures need to be expanded for SBITAs. And you may be surprised in your government, again, who is signing contracts without signatory authority. That is a bone to pick that you get from, your auditors. One of the first things we ask is, hey, who has you have a list of signatory authority? And if you don't have that list, well, guess what? Everybody can sign a contract, and that's a problem. And so, yeah, again, after all, it's easy to download an app without controls. And then you see a bill, and you're the accountant or you're the auditor, and you say, hey, wait a second, what's this bill for this app? And somebody says, well, I just downloaded this app. Well, okay, so how do they have authority to do that? And oh, by the way, here's a bill for $50,000 by downloading that app. And I mean, that's one that really drives me up the wall, sometimes. And so try to centralize that as much as possible. The required note disclosure is almost the same as SBITAs as it is for lessee contracts and leases, but make sure that your capital asset footnote has a separate subsection for right to use leases and SBITAs. Don't commingle this stuff with your other capital assets. And if you want, we have a draft note disclosure we can provide if need be, but it's real simple to visualize. Do your capital asset disclosure, get to a subtotal on that capital asset disclosure, as you always have done ever since you implemented GASB 34 over 20 years ago, and then do a subsection for your right to use assets. And you could put your leases and SBITAs and P3s down there. So feel free to, again, work on your note disclosure as soon as possible. Now, we have additional resources that can help you, again, with this note disclosure and so on. But also remember in your note disclosure, you're going to have a beginning balance restatement if it's significant this year. And so keep this as a checklist. Now, one thing I forgot to mention, there's no need to put the SBITA liabilities in your debt roll forward schedule. There's a specific carve out on that one. And what I'm talking about is your debt roll forward where you have beginning, plus, minus, and end. And there are folks out there who want to make sure that it ties to your overall liabilities. No, you don't need to do that. All it needs to really tie to is your long-term debt. And you're going to say, well, isn't a SBITA long-term debt? Well, yes, but GASB provided a specific carve out that you do not need to put your SBITA liabilities in your debt roll forward schedules. Okay, so with that, Wesley, why don't you take us home and talk about some resources that both of our firms can provide?
Yeah, yeah. No, definitely happy to. And we definitely have some additional resources that can help you implement GASB 96. I know I saw a question in there of, hey, can we have some ideas of specific data points that we want to see? Go to these resources, right? There's so much helpful information. As leader in the industry, both Eide Bailly and LeaseQuery, right? We strive to provide those additional resources and free tools via our website. So please take the time to go check those out, right? There's some linked in this presentation here, but we just want to help you out as much as we can to seamlessly transition you, right, to that new SBITA accounting standard. And so that transition guide that you see on the screen is a great one that will walk you through step by step of what to consider, how to implement things like that, along the way. And so a lot of great resources, both on our website, leasequery.com, as well as Eide Bailly's there too.
thing. All right, so I'm just going to go from the top of the list, Wes. I've
Yeah.
seen different treatments of GASB right to use assets and liabilities, and this includes continuing the full right to use liability balance as a current liability and counting the current part of the right to use asset as a current asset and the balance as a non-current asset. And this can create a massive inverted current ratio. That's because current liabilities are more than current assets. What's your view of whether the right to use liability should be treated as a current liability, and where while only part of the right to use asset should be considered a current asset and that balance as a non-current asset? Well, that's a lot to digest
Yeah.
on that. Um, First, in a classified statement in that position for a proprietary fund, which is what the gentleman is asking, you do have a current portion of liabilities, and but do you have a current asset? That's debatable. It really is a right to use asset, and that would fall under our, the capital asset section, and I wouldn't call a capital asset a current asset at all. On it now. Could there be a prepaid that would be a current asset? Absolutely, there could be, because you may be, paying down on that SBITA well in advance of the SBITA term. Now, okay, that would be a situation where your current assets could very well be more than your current liability. It really depends on the contract, but certainly in a classified statement in that position, you would have current liabilities and long-term liabilities. It's debatable on a current asset versus a long-term asset simply because of the differences in the contract. What do you think, Wes?
Yeah, I mean, like you said, a lot to digest there, but I would probably fully agree with you there. Yeah, understanding that there's that current liability aspect, but like you said, unless it's something like a prepaid, you could see that current asset. But other than that, I'd say that you're pretty good with just keeping that current liability there.
Yep. Yeah, I agree. So this one, GASB 99 had a twist to the exclusion of GASB 87 and 96 SBITAs. I'm not sure how this new GASB would work for leases that are set up for one-year terms and have the option to extend for various one-year terms, but they need mutual agreement. Would they be considered GASB 87 leases as long as the term keeps extending? Well, it could be. Again, at least in my mind, this depends on the language within
Yeah.
the contract. And you hate to answer a question, it depends.
Yeah.
But
Yeah.
this one is a facts and circumstances answer in the contract. And so take a read of the contract, compare it to what it says in 96 and 87 and 99 as amended by 99. And if it is those one-year terms, it could be a long-term contract. I mean,
Yeah.
what do you think, Wes?
Yeah, I was gonna say that the same thing. I get questions like this when we're on demonstrations, and I was, I hate to answer in absolutes, but I also feel bad saying, like you mentioned, it kind of depends, right? Without seeing the contract itself. But yeah, if you do have those one-year terms, again, it's not whether they're reasonably certain to extend, but if they're present in the contract itself, then you're going to have to consider that for the full term. So, I would see these leaning more towards being a lease under GASB 87. But again, without the contract itself in front of you, it's tough to answer for sure one way or the other.
Okay. So we have another one for leases that are cancelable or do
Yeah.
not convey exclusive control of the asset. Would the leases be termed something other than a finance lease? And they also had a follow-up question. I think that's more of a qualitative judgment or a prepared judgment, at least in my mind. I probably wouldn't call them a finance lease. I'd call them a
Mhm.
borrowing.
Yeah. Yeah.
Yeah, yeah, or
Makes
some
sense.
other payable. If multiple lessees can use the leased asset such as land, would that still be considered to convey control?
Mm.
Well, okay, this goes down it
Another.
depends.
Yeah.
It's up to the contract,
Right.
and if it says that, gee, your government can only use the leased land for 3 days or 3 months a year, that's what it says in the contract.
Yeah.
And so then it needs to be evaluated whether or not it falls under the leasing standards.
Yeah, I'd say if the multiple SCs doesn't just, that alone doesn't take away control, right? Because you could have a portion of that land that you have that control over, right? Then you're going to have to start to identify that portion as your asset and liability there. But again, there's a lot of caveats that could come into play there, because like you mentioned, it could just be periods of time. But again, remember, like we talked about earlier, that even if it's 3 days a month, you still have a set time frame in there, and it does not have to be uninterrupted to have that contractual term there. So
Yep, I agree. Now, here's one that was asked: if property is held for resale, does it fall under GASB 87? Well, it depends on if you have a lease contract. Gosh, that phrase, it depends. If you
yeah,
have a lease contract, even though the property is held for sale, you could fall under GASB 87. But also, breaking news, there will be an exposure draft out later on this year from the GASB on non-financial assets. And one of the things that they're dealing with is, should there be a new gap relating to property held for resale? So again, I think that falls under the it depends.
yep.
I should get that printed and hold it up. You know.
Eric, we got about 74 of these questions here. This may be a good indicator that you should partner with a software provider and a service provider like Eide Bailly, huh?
Absolutely,
Yeah,
absolutely. All right, if we, I'm actually surprised with all the lease questions, but
yeah,
I shouldn't be surprised, I suppose.
yeah,
Because of all the different flavors.
yeah, yeah.
Here's
Well,
one.
and
If
everyone just has gone through this struggle and pain, and right, I'm sure a lot of these questions were questions their auditors were posing to them as well.
Right, right.
Yeah.
Well, one person I was mentoring early this morning, he says, "Oh, I have to recognize my faults," meaning him. And I said, "Yes, recognition is always the first step in
There you go.
recovery." There we
There you
go. All
go.
right. So here's one: if we only sign a 1-year lease, but intend to renew, but it's not 100% known by the close of the financial, can we consider it as short term? Oh
Mm,
gosh, there are those facts and circumstances.
yeah.
Or because we think we will need to renew, do we need to capitalize? I think you go look at the qualitative aspects, meaning your history of renewal, yeah, a lot of folks say, "Oh no, we can't renew because of the fiscal funding clause." Well, no, you got to
Yeah.
look at the pattern of renewal. Don't you
Yeah.
agree, Wes?
Yeah, and then also too, if those options are even in the contract or not, whether it's on your side of, hey, we know we want to renew, but there's no actual language about a renewal option, that changes the consideration as well. But then on top of that, like you mentioned, there's a lot of different caveats that you could say, hey, to try to get out of those renewal options. But if they're there, you got to consider them.
Right. And then, of course, the same facts and circumstances apply to a SBITA.
Sure.
Once you're in a software package, you and I know, Wes, once you're in there, it's darn difficult to leave.
Yeah. Yeah. That it is for sure.
Yep, it should not be taken lightly. And so, you're going to see the same facts and circumstances over and over again. And so, clearly, if there's a qualitative aspect, you're going to renew. Just say it's a long term and call it a day.
Yeah,
If that's what's in the contract.
exactly.
Yep. All right. Under 96, should we distinguish between the terms extension and renewal when figuring out how long of a term to recognize? I kind of think that those are synonymous, don't you
Yeah.
think, Wes? Yeah.
Yeah, I don't know if we might be getting a little bit too much into legal language here, but yeah, I mean, if you have an option to have a longer period, right? Whether they call it an extension or renewal, it's the same thing, right? That you have the ability to, increase your term in the contract. You're going to have to recognize that as long term, and then obviously in scope under the standard.
Yep. And somebody asked if we include the system in our fixed asset system, do we still need to count a SBITA? Well, I don't know your limitations or possibilities of your fixed asset system, but either way, it should be reported.
Yeah.
Yeah. And a friend of mine from up north of me asked, for the purposes of GASB 96, can master agreements be treated as legally binding contracts in terms of reporting liabilities? I think that depends on what it says in your state law, Tom, and in your jurisdiction. But usually, if you do have a master agreement, whoever is signing that master agreement, and in your case, it's the state controller's office, probably has that SBITA liability. And you may sign internal agreements with your state departments to use that software license. And so within the terms and conditions of the master agreement, wouldn't you agree, Wes?
Yeah, that's definitely an area you're the expert in here, and so yeah, I wouldn't go against any of that.
Yep. Yep. Great to hear from you, Tom. Here's a good one, and we'll go about another 2 or 3 questions. I'm confused as to how this software is as a service is an exchange-like transaction. You may expound on this in the next few slides, but I'm putting this out there just in case. So,
Mm.
software as a service, um, usually in terms of the contract, you're paying for the right to use that particular piece of software. You don't own it, you have a right to it. And that particular piece of software could be rather an expensive payment depending on the amount of usage that you have. And so it could be an exchange or an exchange like transaction. I mean, won't you agree with like in
Yeah,
the case of LeaseQuery,
yeah,
your costs could get up there.
yeah. No, for sure. And I mean, there's a reason why the board put exchange or exchange like transaction and not just payments, right? If you have payments on a contract, there's a lot of caveats in there that you have potential for different types of exchanges. But again, you're typically offering some type of monetary value to get the right to use a software as a subscription, right? And so that's where you have that exchange, is that they offer the service, and then you're coming back with typically some form of payment. But again, there are other options out there for sure.
Yep. And here's somebody who asked about a particular web hosting service. I won't say the name, but it is very well known. Most of us have it on our phones, or they're getting very wealthy on us working from home. It says IT said there's no contract and the city pays every month or every year. Well, the fact you don't have a contract gives me a little bit of pause as an auditor. Um, you should have a contract, and of course, if you don't, uh, I wouldn't want that particular hosting service to know about it, because you have to worry about compliance with laws and regulations.
Uh,
Um,
You know, Eric, I would say that this goes back to a good point that we talked about earlier. The question mentioned that IT said there's no contract, but I think this is something where it's really critical to make sure you have everyone involved here, right? Because there's potential that maybe another department, or something like that has that contract, because it'd be very surprising to see absolutely no contract anywhere, right? So making sure you're getting all the parties involved to find those, I think, is really critical.
Good idea. And then let's do our last one
Yep.
in deference of time, because we're headed towards the top of the hour, pretty much stuck the landing on this one. In the SBITA definition, I thought short-term contracts did not need to be disclosed. For note disclosure purposes, the answer is yes. For financial reporting purposes, you do have an outflow. But for
Mhm.
audit purposes, you gotta know those short-term contracts for completeness. And so just be careful on those, Wes. Would you agree?
Yeah, yeah. I mean, an auditor is, I'm sure you're aware, never going to just trust you and say that, hey, everything that's not in here is out of scope, right? You need to get that full portfolio, and then again, then you can start to section that up to in scope and out of scope. But the auditors are going to want to look through those short-term contracts and say, and do their testing, right, to ensure that they were properly identified as short-term. So yes, make sure you get all of those contracts consolidated together for sure.
Right. And so, yeah, I mean, remember the discussion I said over and over again about Netflix, that you're getting notice from Netflix saying, "Hey, you're not a registered user," and because your Uncle Leo decided to give you their license and login. Yeah, again, you got to make sure that you're licensed and so on in that one. So with that, let's go back to what's on the screen here.
Yeah.
This is our upcoming and again, we'll get to the other questions over the next few days. This is where we're going to be over the next few months. By all means, come see us, Eide Bailly as well as LeaseQuery, especially at GFOA out in May in Portland, Oregon. And Wes and I certainly thank you, Wes.
Yeah, thank you again so much, everyone. I know we had a long time here, but we know with the amount of questions we got, it seems like we had a really engaged group, and hopefully you learned something today about the two fun standards we got going on here. But yeah, again, thank you so much, everyone, for your time. And like Eric mentioned, we'll make sure those questions are answered and distributed out accordingly.